Hey guys, Kiba here for CryptoSlate. Here again for another episode of the SlateCast. Today we have one of the new investors in CryptoSlate, Jason Fang from Sora Ventures, talking to us about what's going on in the Asia markets, why he believes in CryptoSlate, why they came on board as a partner. It's going to be really fascinating. Hopefully, I'm going to learn some stuff. You guys are going to learn some stuff about kind of what goes on behind the scenes a little bit in CryptoSlate. It's going to be a really fascinating episode. Stick around. Okay, let's bring Jason in. Jason, how are you doing?
Hey, I'm doing well. Thanks for having me.
Yeah, thanks for coming on. Really excited to have this chat. So you're one of the managing partners at Sora Ventures. You want to give people an idea exactly kind of what you guys do, where you're based, what your sort of thesis is on crypto?
Yep. So Sora Venture is a blockchain focused fund. We started
Hmm.
in kind of early 2018. Probably one of the first funds in Asia to fundraise from a family office. And um, at that time, we were probably still one of the earliest funds that had the proper third parties involved, custodian, the fund admins. So we were aiming to become more regulated, including KYC, and all that stuff. And
Hmm.
so, ever since we've been investing, in protocols and layer two and NFTs and gaming, and we also have a what we call a liquid portion. So because we're open-ended fund, slightly different from a lot of traditional VCs where most of the VC money is, they're close-ended. They focus primarily in the equity market or in
Hmm.
tokens. We also have a portion in trading where we have exposure to secondary market as well.
Oh, fantastic. So you recently came on board with CryptoSlate as an investor in the current round that's going on. What attracted you to CryptoSlate? Being from the Asian markets, obviously a lot of the audience at CryptoSlate at the moment is US and Europe. What was it that attracted you to what we're doing?
Yeah. So in traditional VC or in traditional, fundraising, a lot of times we try to get allocation because of their LPs. Like for example, if I have a really big LP or have a LP who could really add value into a portfolio companies, then that makes a lot of sense in an equity deal, more mostly from Web
Mhm.
2. Now in Web 3, things are slightly different because the investment cycles are shorter, the listing cycles are shorter. There's a lot less rounds compared to the equity. The lifespans in general in terms of fundraising is also a lot shorter, and so we want to be having value add that are much more uh, basically for Web3 portfolio companies, and so that
Mhm.
reason we really focus on building two areas. One is community development, and the second part is basically marketing. Um,
Mhm.
so naturally, when we built Sora Ventures, we've decided to allocate a portion of our AUM investing into companies that have exposure, through media coverage, who have conferences. Some of them do conferences. Some of them do purely community development. Some of them will even help you boost your community numbers on social media, and some will help you do translation. The whole
Mhm.
purpose of this is, one obviously is to add value to when we make an investment, we're obviously adding immediate value that you can see within weeks or within days. And
Mhm.
two is, even though China today is closed, the market is closed to Web3. It is an area that we believe that it will open up eventually in the future. We don't know when, but when that happens, we want to be prepared for that. And
Mhm.
so we've continued to be positioned in Asia and continue to do investments in Asia because we do think that there's an opportunity for that in the future. And so
Mhm.
CryptoSlate being one of the leading media companies, obviously we're interested, uh, and we're not just looking at this an investment perspective, but also thinking of how we as investors can also bring business to the media business. Because again, traditional media is actually one of the worst investments to do, relative
Mhm.
to all the other industries. right? If you're looking at, for example, gaming, you're looking at gambling, you're looking at healthcare, those are way better bets, just the nature of what they're doing. But in Web3, for example, there are sponsor marketing, there's sponsorship, there's community development, and these aspects are actually quite valuable to portfolio companies. Now the
Mm-hmm.
question is, who do you want to work with? Like, who do you want to match with from the from the media part, side of things, and at the same thing, the project side of things. And so we
Mm-hmm.
act as a bridge where we're bringing really good quality projects to kind of the media partners that we work with. And
Mm-hmm.
at the same time, we feel that, hey, if we're bringing a lot of these value, why don't we also invest in these value add companies, because we're helping them grow anyways.
Mm-hmm. That makes a lot of sense, and I know that was one of the things that Nate was super excited about, and myself as well, is sort of access to news and projects from the Asian markets that maybe aren't getting as much airtime and coverage in the West. To say, I was just talking to you offline before, saying we've just completed a podcast with some of the team from Biddle Asia, and I find it really fascinating that there's a lot going on that maybe say we don't have enough coverage of. What do you feel is different in the Asian markets compared to the Western markets in relation to crypto?
Yep. I think the best way to kind of look at this is from a more holistic point of view from Web 2.
Hmm.
So historically, what happened in Web 2 was a lot of U.S. company will focus mostly in innovation, inventions, like things that are relatively new. If you read the book from Pure Field 0 to 1, he will basically say that U.S. is basically producing a lot of these new verticals where these are mostly new stuff, inventions, technology-wise, is innovation, is improving things, and but in Chinese market, it's more of a horizontal, where it's like you're scaling on top of the existing products. So if you're
Ah.
looking at the Chinese market, for example, a lot of the companies that you see today, including Alibaba, or equivalent of of Amazon, or equivalent of Netflix, of equivalent of Uber, those all exist in China, right? But
Hmm.
for some reason, those tend to scale a lot faster than the US companies. And that's because
Mm.
user growth is a lot more easier to scale in Asia. There's a lot more people here.
Right.
The labor cost is a lot lower here. The turnover is much lower here, et cetera, et cetera. That makes it very, very easy for companies to scale. And so when we're looking at the Web3 investment, obviously we're looking from a long-term perspective, where we also think that it's going to be a very, very similar model, where a big part of the technology that we invested, whether it's in infrastructure, whether it's in layer two, whether it is in innovation itself, the protocols that we invested back in 2018, those will become essential, we call playbooks for kind of the
Hmm.
future investments that we have in Asia. Very likely that anyone that are successful is going to get mimicked to the Asian market, and very likely they'll do actually better within a shorter period of time frame. And that's what we're really trying to go for, is to mimic that exact model from Web 2 into Web 3, where Asia being obviously a much more unique environment, because people's appetite here is more leaning towards speculation,
Right.
whereas a lot of in the US and the West, they tend to look at technology and product, right? And
Hmm.
so what we expect is that the growth in Asia will be much more fast paced than the West, when the market opens up.
Are there any examples that you've currently seen of faster horizontal scaling in Asia in relation to Web3 than in the West?
Yeah, I think the biggest example, if you want to like really look at things, are like case studies today, are exchanges, right? If you
Hmm.
look at the top exchanges, obviously this was, if you're looking at this before regulation, the top exchanges in crypto are run by mostly Chinese. Obviously,
Hmm.
they will say that we're not Chinese,
Hmm.
we're not anything affiliated to China. We don't take Chinese users, but they're run by Chinese, right? And they were started by Chinese, and a lot of people were started, like a lot of the entrepreneurs kind of started also in China, like within Chinese soil. And so the nature of the business, the nature when they scale initially, has a lot to do with the environment we're in. The things I mentioned being that you know a lot of Asian contributors are like slightly more to speculate than
Hmm.
to use. than to become more of a user, right?
Right.
Because the market is a lot more, more what we call early stage, and because at that time it was obviously there wasn't a kind of like black and white. People were able to take advantage of that opportunity and scale really, really fast. Whereas the U.S. obviously there's the SEC, there is investors who are much more conservative. They have a prefer when they do investments, they have a preferred route for the companies they invest in. That naturally makes it much more difficult to mimic that model in the U.S. And so I think if you're looking from a very mature vertical in the crypto space, exchange is a good example where they've fully taken advantage of kind of the jurisdiction they're in the early stage, and now they're ready to kind of pivot out into that other jurisdiction where they have a bunch of money to scale, they have a bunch of money to grow into other parts, and then more importantly, a lot of these companies aren't looking to go IPO or anything close to IPO. For example, I don't think Binance is going to ever go IPO. They probably don't need to go IPO. So that is something that I think will be very similar in the years to come. Businesses don't necessarily have to go the IPO route if they choose to. They don't want to do that route.
So one of the things you talk about in terms of, say, China especially being closed off at the moment in terms of the market, are you worried about the speed of the evolution of regulation in crypto and how the US seems to be trying to, in my view, kind of get a handle over regulation and apply it on a global sense to crypto? You look at, say, Ethereum at the moment, and OFAC sanctions are now being applied almost across the board. I think it's over 51% of validators are now applying to OFAC sanctions because they're using things like flashbots, which are adhering to sort of the censorship on the chain. Is there a worry that by the time that China opens up, the regulatory framework is kind of already been set?
You know what? That's a very good question. I think the way I look at this is that I'm much more excited to see how China will leverage Web3 to their advantage in growing their currency. Now I say this because if you take a step backwards, right? I mean, fundamentally, the Web3 economy in general have benefit which party the most, right? If you think about it, and the answer is it's the USD, is the US fiat, which is obviously the opposite of what the Chinese government wants, right? And so I think the Chinese government clearly knows that Web3 has that potential and has that leverage to make their currency a lot stronger as well. And they're definitely learning and seeing how this, the US have done it. Now the question is, how would they also leverage Web3 to their full advantage in the future? And I think obviously that's not something that I can answer now, but I do know is that fundamentally they need to have the RMB first figure out. And this is something that I'm sure you guys have covered in the past, where the Chinese central bank have been looking to issue their form of digital RMB using certain elements of distributed ledgers. We don't know exactly how that is gonna be used, and if that's going to be on a totally different equivalent of let's say Bitcoin or USDT. But what we do know is that with that in mind, we can expect that the digital RMB will strengthen, and it will become a much more broader use case. Perhaps in the first couple of years, it will be used on the One Belt One Road policies. Countries like Southeast Asia, for example, might leverage it. So that's what we're looking at, and that's what we're betting on too. How they're going to do it, I think that's a very difficult question. But even if they figure it out, I think there's going to be ups and downs. There's going to be trials and errors. But I am very excited to see how they do it. I'm very excited to see how that gets played out. And I know for a fact that this will be very, very helpful for the Chinese RMB.
So in crypto, just in general at the moment, obviously in a bear market, I know I've spoke to you offline before in the way that you've positioned yourself for this bear market as being in a great position. And similar to say like A16Z set up a huge fund ready to invest in the bear market where you can maybe get better deals then when there's a bull market going on. What innovations are you most excited about and expecting to see out of this bear market? What problems do we need to solve before we can see the next resurgence in the crypto markets?
Yeah, great question again. I can talk for like hours and hours, but I think with kind of like I'll focus on one thing because I think this is probably most relevant to what we're seeing in the industry today, and that is the metaverse, the concept of the metaverse, right? Which a lot of people have been betting on, gaming companies, gaming studios, GameFi, anything to do with gaming, right? And the concept is that, hey, if we invest in these guys, they're going to build us some product that will get us closer to the metaverse. Now, what is interesting is that a lot of these deals in the past year haven't done well. And the reason for that is because, specifically in GameFi, and I think the reason for that is because even though everyone understands the metaverse is going to be future, everyone understands that this is going to be an incredible, useful product that I think a lot of people will be looking forward. And a lot of people in the crypto web3 space will definitely be the whole low-hanging fruit users. The question is, what are we still lacking, right? So I think a lot of the mindset of most products that we see today are still kind of like they're trying to fly before they even know how to walk. So they're basically trying to build a finished product, a finished application, but it's very clear that the metaverse are the metaverse industry and that part of trying what people are trying to achieve. Those areas of infrastructures are not ready yet. So I'll give you a very simple example, which is, I like to think of as like a lot of things that a lot of the things that we see from Decentraland or Sandbox, a lot of things that they're building right now, actually a lot of existing Web2 companies can mimic or implement quite quickly, right? And probably much more successfully. Now the question is, okay, even if they do that, would that provide exponential value for them that makes sense to do that? And I think right now the answer is no, because if you think about it, there's not a lot of ways for Metaverse to connect with each other, right? Let's say if I'm running a currency, a mana currency in the Decentraland, if I have to transfer those currency into use in somewhere, I would have to swap it somewhere else, right? It's not universal. So how is that improving your experience in general? Or what about the NFTs that we buy? What about the tools that we buy, right? It still feels like you're still playing in your own world of kind of like Web2 game, right? And so even though this is very similar to the concept of big data, where the concept of big data talks about how we're using data and then we're leveraging data to provide solutions to that, your users will have a better experience, right? But actually, the funny thing about big data is your big data is only as powerful as the data you collect in your company. And so for example, Tencent, which is the company that owns WeChat in China, they will never share their data with Google. And Google will never share data with Tencent. And so here they are talking about big data, but really their big data is only Chinese big data, or Google's data is only anywhere else that's open to the West, excluding countries like China or North Korea and places like that. They're not open to Google. Right. So similarly with Metaverse right now, where everyone is driving this huge concept, including the NFT projects that we see today. But if you look at the culture, if you look at the products they're building, it's very close-minded, right? And it's very similar to what with kind of like the big data example that I brought in. And so we're excited to see, from a fund perspective, we're excited to see projects or teams or entrepreneurs who break that, who basically break that wall and see that how you can build those infrastructure or tools that can connect these communities or these products or these what we call projects, right? And it's not going to be easy, right? It's not going to be easy because one, it's you got to understand technology, right? And two, most cultures today in NFTs are very close-minded, right? So how are you going to convince someone from Azuki or Bored Ape to be open and be like, hey, let's work together, right? A board A would be like, well, no, you gotta own a board A first. At least you gotta own something in our community, right, to be part of the community. And same thing with Azuki, right? So that culture is, as we see it today, it's still very, very early. But there, in our Web3 world, I'm sure there's going to be some form of tools that doesn't require a middle person to kind of negotiate. Maybe a tool that is purely decentralized and that can enable these two parties to communicate, connect with in a flawless experience, if users choose to. So these are things that we're looking at right now.
Okay, that's an interesting area. I mean, I saw some stats this morning that kind of back up exactly that, in that it was showing the visits to brands' metaverse spaces in Roblox, and it had kind of like Walmart and Adidas and all the places that have got space in Roblox. And the numbers absolutely dwarf the Web3 metaverse projects that have similar things. You look at, let's say, you say Sandbox, Decentraland, the numbers are absolutely dwarfing it, and they're showcasing that, yeah, in terms of metaverse, I think there is still a lot to be said for the Web2 experiences there. And I think part of it, as you say, is that gatekeeping through needing to, say, own expensive NFTs or other forms of interoperability. But there are definitely metaverse projects opening up to the way of sort of partnership. I know Gensakishi, which is an Asian-based metaverse project, is very keen to allow NFTs to be used from like other NFTs projects to be brought into their game and vice versa. And I'm with you on that. I think that interoperability is a really exciting kind of future for metaverse projects. In terms of a sort of a timeline for sort of this bear market, obviously not asking for direct financial advice, but just your general sentiment. Do you feel like we are gonna likely see pain through, like, leading up to the halving in 2024 for Bitcoin, or are we relying very much on the macro scene? Obviously, we've had a slight pump over the last few days, which is interesting. There's a lot of short liquidations, but what's your general sort of sentiment around the market in the next sort of couple of years ahead?
Yeah. So the way I look at this is, there's basically a spectrum of correlation between the U.S. market and the crypto market at certain price points. So, for example, I think the current price that we're seeing today is still highly correlated to the U.S. market. I think anything below 17,500, 17,000. If we break 17,000, I think it's going to be less and less correlated to U.S. market. And the reason for that is because if you think about it, who bought into the pump, anything after 20K? And the answer is it's mostly non-crypto people, right? The crypto OGs, we all basically had exposure to, had the opportunity to buy crypto well below 10K. So none of the crypto OGs are getting burnt, right? If they bought Bitcoin and they held it even today, they missed the opportunity to sell at 50K or 60K. And it's still held today. You're still making a profit. They're making less, but you're still making a profit. So the ones who are really getting burnt are the ones who had exposure to buying it after 20K. And most of them were either institutions, most of them were traditional money, like old money, or non-crypto money, right? So and so you're going to see a lot more correlation as kind of the prices move up above 18K, and then you're going to see a lot less correlation when we go move down 18K. Now with kind of I think if we break 18K, I think it's very likely that we will get challenged around 15 or 13. But I think at this current point, Bitcoin is still very, very correlated to the macro economy.
Well, it's actually more correlated than ever to the S&P.
Correct.
Well, it's down a little bit, but over the last month or so, the correlation has literally done this. Yeah.
Yes, correlated. Yeah. And so I think we can probably expect something in November with an announcement of interest rate from the Fed. I think you can also expect within the next 6 months to be highly volatile. I think right now is if you're looking to invest in Bitcoin long term, then obviously I think you're generally safe. But if you're looking to speculate in a shorter period, I do still think there is opportunity for Bitcoin to drop even lower. Yeah, and this is again not financial advice, like you said, but this
No,
is
no, no.
just
Just
my
like
personal opinion.
general thesis of how
Yeah,
we see things. Obviously, anything can happen. Bitcoin can go to zero tomorrow. Who knows? It can go to $1 million tomorrow. Like these things happen. I think no one predicted really the short liquidations that happened. I think there was a couple of large ETH buys. And that's one question I suppose I'd like to round this out of. Do you see Ethereum leading the markets in future after the merge and potential new investments into sort of EVM compatible markets?
yeah. So in terms of product, I think Ethereum is still definitely leading the market, and the way I put it, this is, obviously there are other products out there like Solana, Avalanche, equivalent that EVM compatible, like you mentioned, that can build up, probably provide a lower fee, faster experience, and you might even get grants from the foundation. So
Mm-hmm.
you build a stronger relationship with the community, basically. So there's
Mm-hmm.
certain benefits, obviously, for not building on Ethereum. But in terms of technology and innovation, I think Ethereum is still like way ahead, right? And in fact, I think Ethereum is still the leader in setting the bar for kind of like where applications will be in the next
Mm-hmm.
couple of years to come. And so I think the way I look at this is the roof in terms of innovation, in terms of where Solana and all the other protocols are heading to, is correlated to Ethereum, right?
Mm-hmm.
If Ethereum makes a major breakthrough in certain standards or in certain technology or improvement or innovation, we're probably going to be we'll probably see something very similar happening in other chains as well.
Mm. Interesting. I think there's an interesting element to kind of the cross chain future. Don't know if you saw Circle's recent announcement with Axelar in that now there's interoperability. You can now swap cross chain using USDC without any bridges. Like this sort of innovation is huge for the space. And I was speaking to the Solana Foundation last week, and Matt from the team there was very much saying that like we want to collaborate with other chains, but we want them to exist. We see a multi-chain future. We don't see ourselves as the Ethereum killer. We see ourselves as another blockchain within the space. Do you think that? Do you agree with that metric? It kind of sounds like you do by saying that you'll see other innovations. Do you
Yes, for
think the
sure.
multi-chain future is what we
Yeah,
need?
100%. I mean, echoing kind of that back to what I was saying is, if a company is following the path of another company, it's as and the way I look at this is like Hong Kong trying to copy Singapore. Now, I know you're not from Asia, but Hong Kong is basically, if you're in Asia, then you'll probably agree that, okay, Hong Kong, in terms of a lot of policies, real estate policy, all that stuff, have been trying to copy for Singapore for a long time. And
Right.
you'll see that because of that, they're very compatible, right? In terms of,
Hmm.
you know, regulations, in terms of tax, everything is very, very compatible. And
Right.
so, obviously, I do think that, if you're looking to play the long game here, you have to leverage other communities, and to not do that, it's basically going backwards. This is
Hmm.
very similar to kind of the example I mentioned about NFT communities too, right? Which is like, if you want to grow, you can't just be like, oh, you got to own my NFT in order to be in the community, right?
Hmm.
Obviously there are still cheaper ways to be part of it by owning, for example, ApeCoin versus an NFT. But the question is like, can what are some ways that we can be part of the community without not even owning any form of ApeCoin or equivalent of the NFTs that they sell, right? And
Hmm.
that's what we're seeing also in communities like in Solana, where they're supporting USDT, right?
Hmm.
Or they're supporting certain stable coins that Tron, for example, great example, right? They A lot more people use USDT, TRC20, because it's cheaper,
Hmm. Hmm.
right? So I think to have that in mind, to assume that things are going to be open, and if things will obviously be easier, I think it's very common sense here.
Hmm. Hmm. Fascinating. Right. Well, thank you very much for joining us. It was great chatting again. I think the last time we spoke was during the merge podcast, and hope to have you on the SlateCast again in future. Is there anything that you would like to sort of say to the audience in terms of checking out what Sora Ventures is up to, or anything you'd like to leave us with?
I think obviously follow you guys a lot more. Yeah,
Yes.
we'll be bringing more content. So I think if anyone in the audience has a specific topics that they want to talk about, obviously, we specialize in the Asia market. I think we know more about, especially the Chinese market. Even though the Chinese market is closed right now, I think there's a lot of opportunity. If there's interest in that topic, I'm more than happy to kind of share my thoughts on it as well. So bring more diversity to the podcast, and of course, if there's anything that you personally feel that we can also kind of like bring on board, then I'm all open to that.
Brilliant, fantastic. Well, thank you very much. I'll let you get back your day. If you could just wait around in the backstage area just for a second once we've finished off, just so we can close off. But for this episode of the SlateCast, everybody, thank you very much for joining us. Thank you, Jason, for being here, and we'll see you next time.
Thank you for having me.
Thanks.